Okay, so I hope all of you enjoyed that video. And for those of you who do not know, I am Meghna Datta and I'll be your host. And today we will be talking about cyber risk and insurance. And to deliver on the topic, we have with us Vernica Walia, Vice President Liability and Special Risks at Howden India. It's a pleasure having you here, ma'am. The platform is all yours.
Thank you, Meghna. Thank you, everyone, for attending. I, as Meghna said, represent Howden, which is a leading specialist global insurance broker. We pride ourselves in our attention to detail in designing, structuring, as well as managing risk transfer solutions for clients across the globe. As you would have seen in the initial video, we've made our mark in cyber insurance, winning some of the best broker awards, including the best cyber insurance broker award last year. I have been working in this space for the last 9 years and have with me a few members from my team, Mr. Amit Solanki and Mr. Mahesh Chanani, who are here in case there are any questions about Howden later. As Meghna said, the past year has brought in a lot of firsts for all of us. The trends have been worrisome in all aspects, with spotlight being on cybersecurity. Attacks, of course, are a lot more sophisticated and rising. This showcase by CyberFrat and Ambisure has given us the opportunity to learn about various aspects of security. And today I'm going to touch upon the one solution that helps transfer the financial costs related to cyber breaches. Before I begin, I'll just give a brief about Howden. We are a London headquartered company with offices in 7 cities in India. More than 90 territories we service our clients in, and we have more than 15,000 specialists. It's an employee-focused organization, allowing us the entrepreneurship to support our clients and work independently as well as together with our employees across the globe in delivering the best that the insurance and reinsurance markets have to offer. Considering that the world has entered a new era of cyber attacks, although there have been decades of viruses, attacks, and breaches, last year we saw increased bad actor sophistication, a propensity to pay ransom, regulatory precedents where OECD said paying ransom was against the rules and there can be fines against organizations for the same. But the major difference was how all of us learned to live with technology, be it work, family, friends, as well as our day-to-day life. The new normal that COVID established ensured that all our communications were online. Most organizations who had not thought that they could allow their employees to work from home have become more and more technology dependent than ever. The biggest challenge, of course, has been moving to this virtual space. And we don't see this as a small trend, and we see that this is going to continue for some time. Most attackers have taken advantage of this fact. They are being more and more sophisticated, and ransoms are rising. Ransomware was one of the largest scenarios that came up. We look at some figures later in the presentation. The benefit of all the geopolitical uncertainty as well as the chaos that companies were dealing with has given a significant increase in not just cyber attacks, but also payments being made to hackers. In fact, a lot of hackers have become richer by the minute. Some reports mention that in 2021, hackers would be making $11.4 million per minute. An Indian minister mentioned that Indians last year itself suffered around $18 billion of loss from cyber-related breaches and incidents. Severity, of course, has been profound. Ransoms have rocketed. Some means that companies used were phishing emails, fraudulent domain names, malicious apps, majorly COVID-related, preying on individuals' appetite and scare with respect to the pandemic. and also vulnerable endpoints. We also saw some of the largest companies being hacked. Garmin, for example, allegedly paid $10 million in ransom. And it is said that the attack initiated from a COVID-related phishing email. In short, cyber losses have been up more than 50% year on year. Unfortunately, India has been in the limelight for cyber attacks for the wrong reasons since the last couple of years, 2020 seeing most of such attacks. O365 credentials harvesting, healthcare sector being targeted, where hackers were looking at vaccine-related information. Most malicious apps and domain names, of course, have been in the limelight, but the major one that we saw was supply chain incidents. And the recent one was one of the most sophisticated, planned, and executed targeted attack against SolarWinds, which saw majority of the US government being influenced. India saw the cost of ransomware go up significantly, with a recent report saying that it cost around rupees 12 lakhs as an average for most companies, and in this survey we had 1,400 companies participate. 1.4 lakh crores was the estimated damage from ransomware attacks alone. Organizations in India were hit by ransomware at 82%, almost double of the global average of 51%. It is alleged that it takes a hacker only 11 seconds to initiate a ransomware incident. All these trends is something that we've been seeing in the global world, but India is only rising to it. Lately, the last report that came out for business risk, which is by Allianz Global Corporate, globally said the top 3 risks were business interruption, pandemic, and cyber risks. Now, this is slightly varied for India because India rated cyber risks to still be the topmost on their agenda for the key business risks to watch, and followed by business interruption and pandemic. So this shows that we are at the cusp of a change where we are expecting a regulation to come in and also impact how things would pan out in the future. Mostly people believe that external threats are the key when dealing with a cyber breach or incident. We have seen that hackers are more sophisticated, organized crime groups, as well as nation states are the ones that are getting into a lot of targeted attacks. But besides external threats, what most companies tend to ignore is internal threats like employee negligence, lost portable devices that can lead to them having to notify regulators in foreign countries, as well as malicious employees who are looking at harming the organization. So in India, as long as we don't have a specific law, and we do have the draft data protection privacy bill, but until that that is legislated, it will take time for companies to take privacy seriously. But that has not stopped hackers from targeting Indian organizations. We saw some major attacks on government infrastructure, as well as ransomware incidents against companies. Some of those reported breaches were not by external attackers, in fact, by internal employees. Even a misconfigured firewall could lead to a loss of information, just that individuals don't really know about it. A large Indian airline was hacked last year, and we don't have a lot of information in the public domain because of lack of regulation. But that does not mean that there hasn't been a loss, or does not mean that costs have not been incurred to respond to those incidents. We are, of course, seeing a change in the threat landscape where there are higher instances of nation states trying to take advantage of their sophisticated prowess with attackers. There is multiple and high impact vectors that are being used. Just patching of vulnerable software is not effective on their own. Advanced persistent threats are instruments that states as well as organized hackers are using, and majority of the attacks, even though remaining criminal, can of course lead to significant loss for companies. It is important and very relevant to not just have tools to protect your organization, but also have means and mechanisms to safeguard in case an instance happens. The attack surface is evolving. For not earlier in India, we used to see companies buying cyber insurance that were mandated to do so by their clients or due to their presence in foreign geographies, and that was mostly tech companies, followed by financial institutions, and now with the last couple of years being a very good example, we have majority of manufacturing companies looking at cyber insurance and trying to protect themselves. It is important, as I said, to look at the fact that it's not about whether you will be breached, but being prepared for when you will be breached. Instances like Marriott and especially British Airways that was hacked multiple times and most likely faces a fine of hundreds of millions, we do foresee that even large organizations where they have all the means in place to protect themselves would still be hacked. So while we invest in securing ourselves, it's important to have a plan to deal with the incident and ensure that the company responds and recovers in time. So management plans in case of a crisis, ensuring your incident response plan is in place and can be brought into action at the drop of a hat to reduce your response time is critical. As I said, regulatory actions are increasing day by day. We are seeing this globally, especially with GDPR. We saw that companies suffered significant investigations, even though not large fines as was expected. But the US, UK, rest of the world, Singapore, and hopefully India will see some large litigations. As I mentioned, ransomware was a critical player last year, and we do expect things to continue to rise. Just that paying the ransom may not be the best solution as far as regulators are concerned. So a company might face action if they are paying ransom. For example, a renowned European football group is looking at around 15 million pounds as fine in case they are found to have paid ransom for a recent breach. So that showcases how things are changing and how insurers, while earlier were looking at cyber insurance as where there was enough capacity and interest, will be looking at risks from a perspective that companies are prepared to deal with a cyber incident. So when we talk about your being prepared to deal with a cyber incident, we look at whether companies are aware whom to reach out to in case they discover a breach. Is it that you have a plan in place, or is it that the senior management needs to be involved? How often are those plans updated? Do companies panic? Is there a mechanism to bring in your lawyer as well as your public relations team to deal with such situations? And of course, the forensics team to ensure that there is no major change in how you can come back up and running to business. Mosque had majority of the systems across the globe shut down completely. They thankfully had one small location in a remote geography that was not connected to the networks and hence had a backup. Their teams took 10 days to bring things up and running, but the kind of losses that they faced is something that you can imagine, and we'll be happy to share a case study later. But the cost for doing everything and getting systems running was $70 million. That for a company like Maersk might not sound to be a significant cost, but it was a challenge for their team to get things up and running. And the only reason they were able to do so was because they were able to handle the incident well. They had a plan, they knew which systems were critical for the organizations to bring up, how they could get their shipping details up and running and ensure that they got back to business as soon as possible. So while you have a plan in place, it might be important and critical that you test that plan regularly, your preparation and detection skills, as well as your plans to contain and eradicate the incident, plus recover from the breach is very important. What is also critical is ensuring that any post-incident activity is logged and your plan updated accordingly. All of this, of course, costs a lot because you need to involve forensics experts, you need to intimate regulators across the globe, as well as ensure that there is no breach of information. And if there's interruption of business like Maersk faced, there would be a significant loss of profit. Now, these are things that cyber insurance can help with, but it's a changing industry and has seen losses that have been significant. Most policies, like a property insurance policy, would not cover cyber, and now they are being excluded specifically. Insurers, of course, demand now that we are looking at a better security posture. Clients are aware of the risk, and it's not very easy to just fill an application and go to insurance. There are policies that can be tailored to the specific industry and your particular security posture, because with a more complex landscape, companies that are aware of their risk and willing to share this information also benefit from being preferred by the insurers, and their response time eventually dictates how the company's insurance posture would improve, and hence they would be able to recover costs that they've incurred to respond to a breach. It's a changing market, as I said, but it's set to grow by 26.3% in the next 10 years, which is a lot as far as insurance products are concerned. Most companies having experienced harmful attacks in 2020, the insurance industry is, of course, under pressure, and insurers are looking at better submissions and preparedness for companies to be aware. So now, if I can just take a quick second on what exactly cyber insurance would cover, and then we can look at details of how companies can ensure that they are protected in the right way and they get insurance that's applicable and the most prominent. It protects you from any virus, hacking, or DDoS attacks, as well as breach of privacy claims that may arise, any media liability because of content on your websites or alleged content that has been posted online, regulatory investigations, as well as fines where considered insurable are covered by the policy. The expert panel, and this is why the insurance is one of the most cyber insurance is one of the most sought after insurance lately, of crisis consultants that have done this and do this day in and day out, be it negotiating with hackers or drafting responses and intimations to regulators, as well as individual customers whose data has been breached, or why cyber insurance policies look as if it's a very good solution for transferring your financial risk, because besides covering you for the third-party liability costs that you incur, there's also the benefit of recovering your own costs, which are called first-party costs, be it arising out of extortion, somebody using phishing to steal funds from your organization, disruption of your network because of a cyber attack, making you unable to deliver your service or continue productions. All of this is something that falls within the purview of insurance and can be bought from insurers in India. But as I was saying, the underwriting process of insurance is changing. Insurers are no longer just satisfied with an application form with minimal information. They are looking at the preparedness of the organization, and there's real value that your partners can add in your risk buying and risk transfer processes. Uh, Ensuring that your supply chain as well as vendors are in control and having audit processes around their security always helps. And pricing today, as well as coverage, we are seeing even in India, which has naturally been a soft market and confident of giving clients lower premiums, we are seeing a significant increase in premiums. And I think this is where Howden and our process of broking can really add value, because not just in procuring terms, we work with you to provide to quantify your risks, which is usually the most difficult thing to do in cyber risks. How can an organization quantify their potential exposure? Because we look at your risk profile, be it through risk assessments you've done, as well as globally, and help come up with an appropriate limit, not just an overall limit of liability that you can take, but also the coverage specific limits, be it for extortion, business interruption, or privacy breaches. That's something that we can do using our expertise as well as our partners, Hyperion X, and that helps organizations measure your risk posture and also look at how you can improve your current posture, which gives insurers better comfort in partnering with you. We also assist clients with benchmarking, which is supported by Advisor Overview. That's a global international tool that is used by insurers, reinsurers, clients, and brokers globally. So if we are looking at helping you define a limit, it's also something that we do in terms of coverage enhancements and the kind of losses that other peers of yours across the globe would have seen in case they were hit by a breach. This definitely helps organizations, but what is critical and what we've been trying to put across now is that it's inevitable that an organization is hit by an attack, and which is where your incident response comes into play. So ensuring that your current disaster recovery or incident response plans or partnered and collaborating with the insurer and the people that they have on board to assist you ensures that irrespective of the kind of scenario, be it the forensic costs that you incur for accounting or extortion or legal firm that you need to hire, as well as regulatory notification, your policy, your internal policy, as well as the insurance policy are in line, and there are limited gray areas when you are dealing with an incident. So in summary, what I can say is that attacks will continue to be well-planned and persistent. Companies, in spite of significant investment in cybersecurity, have fallen as a victim to breaches and might continue to do so. What is important is planning for the inevitable and ensuring that the organizations did everything that they can to respond and recover from such an incident. Cyber insurance does act as a key in transferring risks, and it's critical that companies ensure that their current policies are in line, and which is where we come in and ensure that there is not a major challenge when it comes to claiming in case there has been an incident. That's actually all from me, so we can open it up to questions.
Okay, that was a great presentation, ma'am. So we do have quite a lot of questions, but if there is anyone who would like to ask their question themselves, you all can raise your hand too. Okay, so our first question is from Shashank Devlekar, and he has asked, how is the insured party being compensated against the cyber attack, and what is the procedure being followed to receive the compensation?
Perfect. Thank you. That's a brilliant question. How the insured party is being compensated in case of a cyber attack is when the policy is onboarded, the insurer as well as the insured act in tandem and partnership to define how things work. And as this is a liability insurance policy, it works on a reimbursement basis. So when the insured incurs any costs, in case be it legal or forensic, they do it in discussion and in agreement with the insurance companies. And usual process followed is that once they can furnish bills after the first approval, the insurance company would pay such costs. What is critical is that no cost should be incurred without intimating the insurance company, and which is why having a broker in place that assists you in understanding your obligations as well as the benefits that the insurance can provide, plus the pitfalls, of course, of what is insured and not, will help in getting your payout faster.
Okay, thank you so much for the answer. Our next question is, it actually has two parts. So
Sure.
the question is, do you see a rise in cyber insurance costs post COVID-19? If yes, is it restricted to a specific industry or all across?
Yes, to be blunt and give a short answer, there is a rise in the costs and the premiums that we see insurers charge. Not just a rise in cost, there is also a reduction in the coverage that insurance companies are offering. We saw this as a trend beginning of the year globally, but in the last 6 months, we have seen this in India as well. Earlier, Indian insurers who were more than keen to provide all the covers under the sun at minimal premiums, we are seeing at least a 10 to 20% increase in the premium. And where insurers feel that this is not the right cost or this is not the right kind of a risk, we are seeing insurers also reduce capacity. Another thing that we are seeing is that insurers are not keen to look at just the application form. They are also doing risk assessments on their own. There are a slew of questions, and the latest one being a ransomware specific question from some of the large insurers, where they want to know what the organization is doing to be prepared with ransomware. It's critical for them to understand that you are aware of what data you hold, whether there are backups, whether you have tested those backups, and more importantly, if there are incident response plans, then have those been tested? Are you aware of what your vulnerabilities are and how often you are patching? So it's a changing landscape. Earlier, we used to say that it's a growing industry, but now I would say that it's a growing industry, but with a lot of caution. And we will only see increase in rates going forward as insurers in India also start paying claims.
Okay, thank you so much for that answer. Our next question is, further, okay, this is also a follow-up to that question only. Further, with growing availability of information on cyber risk, how will premiums move for cyber insurance going ahead with more availability of information? Okay.
I believe what the question means, and correct me if I'm wrong, is once the company is providing more information and there's more in the public domain with respect to losses. So I'll deal with both. First, with organizations providing more information, we think that insurers will be a lot more confident in dealing with an organization that's more prepared and open to share details with respect to their current posture and risk profiles, as well as the kind of testing they do. Is there regular penetration testing? How often are those results monitored and then incorporated into the company's risk management profile? What is the reporting matrix? Does the CISO report into whom does the CISO report into when it comes to dealing with an incident, and how often are incidents tested. So that part we see, if companies are being clear, insurers will be a lot more interested in writing their risks and also may get the benefit of a lower premium. But with cyber losses, data being more common, and this is the second part of the question, it's interesting because unlike most other insurances, the kind of losses that we are seeing, the kind of attacks we are seeing, everything's evolving. With the latest SolarWinds attack, it was one of the most sophisticated attacks that people saw. And when the security softwares that you're using are the ones that lead to a breach, then it leaves everyone flummoxed, thinking, how do we deal with such situations? And I do feel that in spite of a growing database of the kind of losses, insurers will be a lot more cautious in underwriting insurance at cheap rates, if I can use that word, as compared to previously, because it's an evolving threat landscape. Because otherwise, you can only have some kinds of fire, and there are only certain kinds of earthquake specific zones across the world. But nobody is immune to a cyber attack today, is what we are seeing.
Okay. Uh, so our next question is, can an organization pay ransom as a last resort? Is there restriction from regulator for paying any ransom?
Okay, so the policy, if I can say so, does cover you for ransom payments, while it provides you with the support of a ransomware specialist who negotiates on your behalf and, if needed, can also help pay the ransom. The latest notification by OECD was against paying ransoms. So if a company is paying ransom to a criminal group or a criminal organized hacking group that has restrictions against them or sanctions against them, then there might be a situation where there are actions against the company. And that was the one example that I gave you, that we are seeing some football clubs who were thinking of paying ransom, not really, may face a fine. But companies, the harsh reality is that companies might have to and have paid ransom to get back up and running and get their business going. So the policy definitely provides coverage, but it's important that if you are deciding to go ahead and pay ransom, then it has to be done through specialists who can verify that the attackers are not the ones who have sanctions against them, and that you are not going against regulation in paying such ransom.
Okay, great. So our next question is, will the cyber insurance cases be triable by our courts or consumer tribunals?
I think we are soon going to see a fast track of cyber insurance cases. And when I say so, I'm not just talking about cases that come up due to attacks against organizations. Attacks against individuals is a major threat. And in fact, globally, there are home insurance policies that come in with a cyber insurance protection for individuals. In India, in the last couple of years, we have seen 3 to 4 leading insurers come up with individual-specific cyber insurance coverage that can protect your wallet, your phone, your cards in case there has been a breach. But of course, they are slightly restricted in coverage because it doesn't cover for all gamuts of threat actors and attacks that may arise. But end of the day, I see that we are getting there. And the government has also mentioned that they are trying to fast track courts. Consumer courts as well as our civil courts is something that we will see get more involved. But my personal opinion and hope is that with the data protection bill becoming a law, there would be a provision for the data protection authority to somewhere compensate individuals and streamline these individual insurance covers so that individuals have more confidence in what they're buying and ensuring that they can rely on some part of the infrastructure.
Okay. So our next question is, how does insurance help when a client is not in a position due to some reason due to some reasons bridge the incident response gap?
Sorry, I didn't get that.
Yeah, I'll just repeat it. It confused me a bit too. How insurance helps when a client is not in position due to some reasons and bridge the incident response gap.
So
Okay,
the
that
client is not in a position to bridge the incident response gap?
yeah, I think that is what he was trying to convey.
Well, insurance helps by providing experts who can aid you in bridging that gap. And if bridging that gap means that if you're not prepared for a particular incident, which is also why we recommend that companies look at cybersecurity as a regular exercise, and which most people who are part of this discussion agree with, that companies should invest more time and effort in educating everybody about the exposure and ensuring that they are in line with what the company's philosophy is. But in a scenario, there's an incident that an insured is not prepared to deal with, the policy does provide for expert support via forensics and teams that have been involved in getting companies back up and running after an attack. It might take longer if the organization's not aware of what their critical assets and data is, but otherwise it helps them ensure that at least they have somebody on the panel that has dealt with such incidents in the past and experts who can advise on how to deal with incidents.
Okay. I hope that has answered your question. If there is any confusion or if we have got the question wrong, you can put down what you meant by the question again. Okay, so our next question is, do you help in the legal process, provide lawyers in case of any litigation?
Yes, so usually global cyber insurance policies come with a panel of law firms, public relations teams, whom you can work with in case there is a notification that has to be made. Because let's not forget, for most public organizations, what we have seen in the last couple of years, when there has been a data breach or a breach of their systems, there have been following litigations against the directors and officers of the company, that is management liability against their personal assets. Target saw $100 million lawsuit against directors and officers because they were not prepared to deal with the incident. So it's important that you have lawyers on board that are aware of your obligations and who will assist you in ensuring your compliance and responding to the incident. So wherein insurers in India, some of them have pre-agreed panels that can assist you, where law firms, PR, and forensics teams are available, and there is you can reach out to them directly. For large organizations, there is also an option where they can use their own law firms to respond to an incident. And all of this, of course, as I said initially, has to be agreed and approved by the insurer to begin with, has to be taken into account, and a law firm that the organization is used to working with can be empaneled with your policy. So it's the best of both worlds right now, where you can use your own law firm or you use the law firm that the organization has empaneled. But we might see that changing if the number of lawsuits increase.
Okay, great. Um, okay, our next question is, how do you calculate the cybersecurity premium for an organization, and what are the key parameters that you consider?
That's really a good question. The premium is usually calculated basis 5 to 6 elements. One is the cyber governance factor, the second, wherein the company's overall cybersecurity posture as well as their reporting structure is looked at, on how regularly the board convenes and discusses their cybersecurity issues and how much criticality is it given, or employees regularly trained. What is the internal posture with respect to educating and training employees with respect to the company's cyber risk scenario. Then the other thing is how prepared the organization is in dealing with the kind of threats that we see in the world, and how regularly are they doing activities around be it patching their systems or updating their incident response plan or business continuity plans, and being aware that if an eventuality occurs where, say, for example, some of their servers are hacked, how soon can they come back up and be performing at the same levels. These are some of the broad structures that we are seeing companies look at right now. But basically, they would look at your geographical presence, whether you are servicing countries that are highly litigious like the US, UK, and Australia, for example. And secondly, they will look at the global revenue as well as the kind of information that the organization collects. And thirdly, it will be the incident response, business continuity plans, number of employees, the people in charge of cybersecurity, and overall preparedness to deal with an incident.
Okay. Okay, so our next question is, what is the usual response time while a cyber attack happens? And please specify according to the risk level of the attack.
Usual response time is something that is defined by organizations when they are doing their cyber risk assessments and drafting their incident response plans. Varies from organization to organization. What we have seen companies do is consider a response time, say, what I've seen in plans is anything from 40 minutes to 10 days, depending on the criticality of the incident. So now if the response time to a major event is 10 days, like we were seeing in the mosque video, where it took them 10 days to get their systems back up and running, which resulted in lines and lines of truckers who were not able to deliver their goods or pick up their shipments. The kind of losses that you might incur or the organization might pile up is something that one may not be able to recover from for years at an end. But what insurance does provide for is business interruption coverage that provides for loss of profit arising due to such disruptions. Such disruptions have usually a time deductible, which is anything varying from 8 to 10 hours. So if it's a disruption that has been managed within 8 hours, it usually is something that may not trigger insurance for loss of profit, but triggers insurance for other costs that you incur, like forensics, PR, legal, or even a regulatory investigation. So I hope that answers the question.
Yeah. Okay. Okay. So our next question is, what are the major circumstances insurance would be declined or the liability amount would be reduced?
Sorry, what are the major circumstances?
Just a second. I'm really sorry. I actually lost the question. I'll check it once again. Yeah, the question is, what are the major circumstances where insurance would be declined or the liability amount would be reduced?
Okay, so there are a couple of sections in the policy, and besides what it's showing what is covered and what are the conditions to be followed in case of a claim and provisions for payment, one section, and which is very critical, is the exclusions under the policy. So most insurers would exclude any antitrust activities, would exclude any criminal acts of the management if it's proven by court, would exclude any activities that have resulted in bodily injury or property damage related claims. And also if there are any gambling related activities, we have seen those being key exclusions. But besides that, the list is limited compared to most other insurances. And we do see that besides the standard sanctions clauses that the the company will not pay if there is any sanctioned activity involved. We have seen that if the application form or the forms that need to be filled in for applying for insurance are in detail and the insurer understands their obligation, we have not seen any major declinatures from insurance companies because forensics is something that is incurred. One thing that I would like to highlight that's not covered under standard policies are your supply chains. So any vendor related losses, any unavailability of critical infrastructure, even your internet supply, for example, is something that insurers might not agree to cover on a standard basis. But if we are able to showcase that the organization has considered them as, a key risk in the risk matrix and has measures in place or has ways and means to deal with such an incident, we might be able to get limited coverage for such exclusions as well.
Okay. So we have another question, which is what is the difference in going with cyber insurance brokers like Howden instead of directly connecting with insurance companies like ICICI?
That's a very good question because most insurance companies would have, as per the regulation in India, have a standard form. And I will not just say about brokers like Howden, but I can tell you about Howden itself, which would be the last 3 slides of our discussion. Most brokers would focus on getting you the lowest of terms and binding the coverage as per whatever budgets the company has in place. But the difference that Howden brings in is spending time in understanding your risk, working with you in mapping that risk as per your global peers, as long as we have some support from the client in sharing some details. We provide an in-depth risk quantification report that helps companies not just look at what their broad issues are, but also helps them quantify what limits they should buy for what broad terms and what is their major exposure basis losses that some companies in the same industry have seen globally. And this database is based off tens of thousands of organizations. This followed by a benchmarking report that helps clients look at how their peers are transferring this risk by insurance, and then coming to an appropriate coverage solution. Once the policy is bound, we also work with our clients in ensuring that their risk management plans are in line with what the insurer is offering, so that tomorrow when there's an incident, the company does not fear in whom they have to get in touch with. Because trust me, the only motive and the biggest motive for the person at that time would be to contain the breach and not worry about whether insurance is going to cover this or not. So being in touch with the tech team, the risk manager, as well as the legal before an incident occurs, and ensuring that the right people are empaneled and aware how the company is going to proceed and are informed in case of an incident, avoids the kind of declines that you earlier mentioned. Wherein I work with we work with some of the largest insurance companies in India and globally, and it helps to talk to them directly, maybe in some scenarios for ease of comfort or maybe the relationship person. It's important to have people on board who has seen claims being managed not just by one particular insurance company, but by insurers and reinsurers across the globe. And having a global team in Howden which focuses only on cyber and that has been awarded multiple accolades, including the cyber risk insurance broker last year by Advising, is testament enough to the kind of inputs and dedication that the team has to ensuring that our clients' cyber insurances work in line with their expectation and their risk profiles. So that's the benefit.
Okay, so I think that was a great question as well as a great answer. Okay, our next question is information or preventive measures which are applied by the client do they need to be disclosed to the insurance company?
It's helpful if the broad strategy is disclosed to the insurance company, because as I said, the more understanding insurers have about not just your risk profile, but also your preventive measures in place, the more helpful it is and more comfort they see in partnering with you. Because going forward, we will see insurers being a lot more selective on the kind of risks that they are underwriting, be it even large organizations. We've seen some insurers walk out of large programs because the company was not prepared enough or was not able to establish that they were prepared enough. So wherein I understand that a common fear is that, this is confidential and we cannot share this with a third party. It's important to see an insurer and work with an insurer whom we consider as a partner, and hence giving them more details about our preventive and response measures also ensures that tomorrow we are able to get more coverage for what our top 5 or top 10 risks are as per the company's internal risk mapping.
Okay. I hope that answered your question. Our next question is, what are the claims payout ratio in India?
That's something that's not publicly available, but I can tell you that 50% of the policies that are in place currently in India have seen claims, and 50% of them have seen claims, and majority of them have been paid.
Okay, great. Our next question is, are there any premium rebates when an organization invests heavily in the cybersecurity solutions?
Somebody once told me, and this also comes in from Howden's own Cyber Insurance Academy, it's not about the number of solutions that the organization invests in, but the 360-degree plan the organization has in not just securing themselves, but also their preparedness in responding to and coming back up from an incident. So if an organization is investing heavily in cybersecurity solutions, that's wonderful, and that shows that the organization is focusing on cyber risk as a critical risk and wants to protect themselves. So besides the cybersecurity solutions, if the organization is also showcasing their preparedness in responding to incidents and also aware of their response time objective and how quickly they can come back and up from an incident and does regular testing, I think both those in tandem will help secure not just maybe a more competitive premium, but also better coverage.
Okay, and I guess we can just take one last question for the day. And the
Sure.
question is the ransomware or other attack which are categorized as war, as most insurers exclude war situation and misuse it to avoid liability? So does it cover that?
There was a very prominent case in the news a couple of years back for one of the largest food production brands, where the war exclusion was used to deny a claim for non-pet, if I'm not wrong. The reason that that was used was that that was a asset insurance policy. It was not. It was not a cyber insurance policy. Yes, all insurance policies have war claims, all insurance policies have conditions against sanctions, but cyber terrorism, which is the key method through which all of this is used, is not an exclusion under cyber insurance policies. So unless it's a proven nation state attack and called war by the authorities, it is not something that's excluded by insurance policies, cyber insurance policies particularly. So cyber terrorisms take care of that particular exclusion for us in cyber insurance.
Okay, okay. So I guess with that, we have come to an end to today's session. And I would like to thank all of you for joining with us and asking some really good questions. And I would like to thank Ms. Vernica for the awesome presentation and even better answers for all the questions. It was great having you here, ma'am. I would also like to thank Ambisure Technologies for supporting us in this journey of this program.